Hi believers, this is Amit from Waya team, and I'm here to provide a weekly bite and the road ahead in the markets. The Indian stock market witnessed a sharp rebound despite volatility and logged its fourth consecutive weekly gain, the longest winning streak since July end. Driven by a combination of improving global and domestic sentiments, Nifty and Bank Nifty both gained. After weeks of outperformance, the broader indices also displayed a mixed trend, with mid-cap index closing in the green with gains of 0.5%, while the small-cap index ended slightly lower with a loss of 0.4%. A mixed trend in foreign investors' activity and profit booking in the global market limited the upside. Foreign portfolio investors, FPIs, took a sharp U turn and turned net buyers in December, snapping their robust 2 month selling. According to NSDL data, FIIs invested 22,766 crore in Indian equities this month. The Nifty IT index reached a new high and rallied around 3% in the last 5 sessions after US inflation data met expectation, boosting hopes for a US Fed rate cut this week. Fundamentally speaking, a rebound from the lows suggests that the buy on dip strategy is working. A gradual recovery in the core sector indicates better H2 earning than a subdued H1 FY25 earning. It is believed that the foreign fund sell-off has subsided in the short to medium term, adding further impetus to the sentiment. Technically, Nifty 50 has taken a bullish stance after breaking the horizontal resistance of 24,600. Strong support is at 24,300, making it a key trader level. Buying is favorable at around 24,300 to 24,400, with a stop loss at 24,100. On the upside, the index may aim to reclaim the psychological 25,000 level mark. Bank Nifty looks good too, and ICICI is positioned the best among all the banking stocks. Talking about an interesting sector after going through a phase of steep correction in July-October period is the railway. They are back on fast track, rebounding sharply over the past month. With the general and the state election now in the rearview mirror, optimism around increased government spending, clearing of stalled railway tenders, anticipation of the upcoming union budget, and more reasonable valuation have rekindled investors' interest in the sector. Optimism on the back of this has propelled stocks like Jupiter Vegans, IRFC, Texmaco Rail, Titagad, and Railtel Corporation to jump around 10 to 17% in the past month. These expectations turned stronger after the Union Cabinet approved three mega railway projects with a capital outlay of Rs 7,927 crore in the end of November. These projects align with the PM Gati Shakti National Master Plan for multimodal connectivity, further fueling optimism for continued investment in this sector. If you are an aggressive investor, you can take position in a small cap rail company called Oriental Rail Infra. It looks pretty good. Let's talk about Indian macros as they are very favorable to Indian markets, proving a theory of bullishness. Retail inflation based on the Consumer Price Index (CPI) fell to a 3 month low of 5.48% in November from the 14th month high of 6.21% in October. Statistics Ministry data showed this. Inflation fell as vegetable prices cooled off due to rising supplies, while the factory output growth touched 3.5% thanks to higher production of consumer durables and garments. Hopes of early rate cuts are there as retail inflation fell back within the central bank's tolerance band in the month of November. Factory output hit a 3 month high in October. Is good news for the economy. Industrial output measured by IIP rose to 3 month high of 3.5% year on year in October, up from 3.1% in September, driven by a boost in consumer durables and the garment manufacturing during the festival season. Globally also, US markets are hitting high as investor sentiments also received a boost following Donald Trump's presidential election victory, as market anticipate his pro-business policies could enhance further corporate profitability. Going ahead, the market is expected to remain very healthy Investors should pos- sorry, investors should position themselves in high growth category stocks gaining from government expenditure. That's all for today. Wishing you a profitable week ahead.